Hello everyone and welcome back to the channel. Last week I took a week off. I was traveling so I couldn't record our video. This is our weekly summary for this week. I'm Micha Stocks and on this channel we talk about the markets. We summarize the week in the stock market and try to bring you the best and the most updated news that happened during the week. Let's dive in directly to the major averages. For the week, the S&P 500 gained 1.6%, the Nasdaq gained 1.8%, the RSP, which is the equal-weighted S&P, up 2.5%, and the Russell 2000 up 4.5%. It's now very close to meeting its all-time high, and would be very interesting to see if by end of the year, the Russell, the IWM, will hit that all-time high. When we look at the major indices, you can see that materials and utilities led the pack, while all the indices ended the week green, with healthcare and financials the laggers. But again, they're up 1.6 and 1.7%, so you can't really complain about them. Crypto market, this was the week for the crypto market. Bitcoin up 7% and Ethereum up 8.5% for the week, and they keep pumping. Bitcoin on the verge, knocking on 100K's door, and that's how it seems. When we look at commodities, natural gas up 11% for the week, crude oil up 6%, gold and silver up 1% to 4% respectively. And here you have the Magnificent Seven led by Tesla, which Trump administration is supposed to be very, very lenient to their expectations. Apple up 2%, Meta up a fraction, 0.9%. While on the flip side, we see Google with a lot of regulatory problems. Amazon down 2% for the week, and the rest on the week. This brings us directly to the news. And if you haven't subscribed to the channel, it would be amazing if you can subscribe to the channel and, of course, turn notifications on. This week was dominated by Nvidia's earnings on Wednesday. Everyone was waiting for Nvidia earnings, and after it, everyone tried to figure out if they were good or not. The market didn't really react to Nvidia's earnings, although they were amazing. We'll see that in a second. Because the market needs to digest the company at that scale, growing the way it grows. I wanna emphasize the dramatic nature of its growth, and again, where the dilemma is. Last year, for the same quarter, this is October 23, data center revenue, which is the green bar here, the bulk of their revenue was $14.5 billion per the quarter. This quarter, it was $30.7 billion. Now, if it was a small company and it wasn't in the billions, it was in the millions, then it would be easy to understand, it would be easy to comprehend. Okay, they're growing, they're small. But because of the size, because of the nature of the customers, it's very difficult to analyze and say, this will keep on growing. Why? Because if this grew by 100%, it means that in a year we'll be at $60 billion. Hence, the earnings, of course, the net income, the EPS, everything is derived by that. That is the main question here for investors, and that's why the stock didn't get a huge leg up. But when you strip everything aside and say, were these good results for the quarter? Yes, they were amazing results. But again, now you understand why the stock didn't go up, and you can see here their revenue growth is at 94%, and they're projecting revenue growth of 70% for the next quarter, which is, again, amazing in the billions of dollars. The war between Russia and Ukraine takes another step forward, with Ukraine targeting Russian territories with US and Britain's missiles. And that, of course, brought Putin to a point where he needs to escalate, also from his perspective, saying that if a country that has a nuclear arsenal provides weapons to a different country, which is Ukraine, and then they shoot at Russia, then Russia can also retaliate with nuclear power. They didn't do it yet, but this escalates. And this whole escalation, at least from my perspective, is mainly due to the new regime that's going to be in the White House by mid-January. And Putin is trying to lay the foundations for the truce between Russia and Ukraine, trying to be in the best position he can versus Ukraine. Simple as that. Leveraged ETF was one of the biggest things in the last few weeks. The ETFs that take one underlying commodity or stock and multiply it. We saw that on the NASDAQ. There's the triple NASDAQ. There's the double MicroStrategy, double Nvidia, double a lot of stocks. Why is that? Why did that become the interesting part? Because in the past, the domination of these kinds of acts were mainly for professionals and on options trading. Now everyone can buy a leveraged ETF. Of course, if you're developed enough and understand enough about the stock market, you can buy it just like a regular ETF. And a lot of money is flocking in because when the market goes up, you want it to go up even more. And that's why when stocks will change direction, when the market will change direction, these leveraged ETF will be the ones that will hurt their buyers the most, although they have leveraged ETF on the short side as well. DOJ is pushing Google to sell Chrome and take it out of Google. This, of course, takes a lot of attention from Google executives, and you can see that the shareholders, or at least the stock, is not performing well due to all these regulatory issues. Gary Gensler, this is a screenshot before he already announced that he's resigning. Will resign his post by January 20 and open the SEC chair nomination to someone else. This is Target. Target had a very, very bad earnings. Some of the people connect her earnings to a retail recession. When I look at all the other earnings that we had this week, like Walmart, TJX, BJ's, Ross Stores, and Gap, I want to isolate the issue and say there's a Target issue. There's no other issue. All the others beat on their earnings, beat on their revenues, and increase their estimation or their forecast versus Target, which had a very, very bad quarter. They're having a very bad 2 years, actually. So Target is the issue. I don't see a retail recession, at least not from the numbers yet. But, if you can spread some fear, uncertainty, and doubt, why wouldn't you? Michael Saylor, the founder of MicroStrategy and now let's call it the godfather of Bitcoin, is going to meet Microsoft board to try to explain to them why keeping $78 billion in cash, which yields 0%, is not a wise move when you can basically buy Bitcoin, maybe not being a Bitcoin maximalist like MicroStrategy, but buying Bitcoin and having some kind of gain and some kind being a double-digit gain. It would be very, very interesting to see the outcome of that meeting. And of course, if the outcome would be that Microsoft would take a fraction of the $78 billion and buy Bitcoin, that, of course, will create that snowball that everyone is expecting. Nvidia, but there are a lot of cooperation this week, a lot of agreements that were updated. Nvidia and Microsoft are unveiling a product integration on Azure. C3 AI, ticker AI, and Microsoft are also working together. Nvidia and Google and their quantum AI are working together. Snowflake and Anthropic are working together. Anthropic is not a stock that is being traded. It's a privately held. It's a competitor of OpenAI. Snowflake, very good earnings with a 40% reaction, I think, after the earnings. Ticker is Snow. Google and Anthropic working together, and the DOJ is looking into that and saying, Google, you have Gemini. Why are you working with Anthropic? What's the catch? Amazon is investing $4 billion, which is now $8 billion since the last time, in Anthropic. Anthropic is currently it's the biggest competitor for OpenAI, of course. Affirm is working together with Priceline, offering buy now, pay later for your journeys, your trips. Eli Lilly presents significant reduction in cardiovascular risk phase 2 study. And this is the Tesla news that brought Tesla up 9%. Trump team is seeking to ease U.S. rules for self-driving cars. Basically, the argument here says the following: you shouldn't give state by state the permission to approve or disapprove self-driving. You should have it by the federal a federal decision. And then if you drive, you go between states. It doesn't make sense that if I drive from New Jersey through Connecticut to Boston, or if I go through from New Jersey to Manhattan, sometimes I need to be beside the wheel. The other times I don't need to be beside the wheel. If it's safe enough, it's safe enough, period. The question, of course, is always if it's safe enough. But assuming it's safe enough, Trump administration and Musk being currently involved in a lot of Trump's meetings, I would be surprised if this won't happen. The Biden administration finalized the CHIPS award for Taiwan Semi, ticker TSM. That, of course, will provide them the ability to get a lot of money from the U.S. to build chips inside the U.S. and not in Taiwan. And that, of course, reduces the risk of the problems that might occur from invasion between China and Taiwan. Robinhood acquires Trade PMR. That will provide them the ability to be financial advisor. Or, on the contrary, expose more people, at least Trade PMR's customers, to Robinhood platform and give it, let's call it that, recognition that they're looking to achieve. SMCI names an auditor, BDI, yeah. BDO as their auditor. Hopefully they will sign their financial statements. And if they will, or actually the market thinks they will, the stock went up 75% for the week. MicroStrategy completes a $3 billion offering of convertible notes that is due in 2029 with a 55% conversion premium. And on the other side of that, on Friday, Citron Research said that they're going short on MicroStrategy, saying the company went too high, too fast, and that's why they need to come down to earth. When you look at the charts, you can understand why. When you look at the things that MicroStrategy is doing, if it's not a Ponzi scheme, and I'm not saying it is, I'm just mentioning that there are people that think it's a Ponzi scheme, but if it's not a Ponzi scheme, what they're doing is no doubt revolutionary to a point where no other company has ever done that before. And again, when someone does something that no one has ever done before, there are always people that are saying that this is a scheme. Sometimes they're also right, but most of the time they're not. And last but not least, PepsiCo announced that they're acquiring a full ownership of Sabra. And they understood that when you eat a hummus, it's great to drink Pepsi Coke or Diet Pepsi near the hummus. Those were the pieces of news for the week. Are you ready for next week? Next week is going to be 7 days, as usual, but less trading days. Why? Monday, regular trading day. Tuesday, regular trading day. Wednesday, short day. Thursday, no trading. Friday, short day, which means we don't really have a lot of trading days for the week. What do we have? We have a few companies reporting. We'll see that in a second. Mainly on Tuesday, we're going to get the FOMC minutes for the last meeting. Like we mentioned, Thanksgiving, and Friday, half a day. That here are the companies that are reporting. We have Bath & Body Works before the bell on Monday, and we have Zoom after the bell. We also will have on Tuesday Abercrombie, Kohl's, Best Buy, Macy's, and Dick's. A lot of retails. We'll hear from them. And again, look at these retails and ask yourselves, in the last quarter, have you stepped in these stores? If you did you see a lot of shoppers? Does that mean that there's a retail recession? If the answer is yes, then you probably agree with that. If the answer is no, I just didn't step in because 1, 2, 3, then you know the answer. Some of the answers might be I never did, which doesn't mean it's a recession. Dell is going to report after the bell. CrowdStrike, Workday, Autodesk. Very interesting day on Tuesday, actually. Wednesday, as I mentioned, half a day. Thursday, nothing. Friday, half a day. And that, of course, brings us to the S&P 500. The green line that you see here is the 50-day moving average. You can see that we like to bounce on the 50-day moving average. Currently, we're a bit far from it. Not something to be wary about. All-time highs around 16 on the S&P. Not far from where we are. It's 50 basis points from where we are. If we drop down, we have support around 58, 52. That would bring us around the 50-day moving average. One thing you need to pay attention to is in the bottom of the chart, you see 1, 2, 3, 4, 5 green days for the S&P. Usually when you have this kind of stretch of green, you get at least 1 or 2 days of profit taking. We're not at all-time highs, so all these gains are not really dramatic. As you can see, if we were here, I would tell you, okay, the correction is coming very fast, but there will be a correction, at least up until Thanksgiving. Things seems to be pretty calm. I'm Micha from America. I hope you enjoyed everything that you saw. If you did, you can smash that like button, and I will see you next time, next week. Same time, same place. Probably less news because of less days, but we'll see.